On the local front, consumer inflation CPI fell to a 3-year low, 5.1% in March, down from 5.7% in February. Where to from here?
I think we're going to see CPI staying relatively low and within that target range of 3 to 6% for quite some time. Look, the potential hazards on the upside would be the second round effects coming in from things like the administered prices, the utility prices, Eskom particularly going up. And you know, one of the things we have to bear in mind here, we've had a strong rand for quite some time, and that has undoubtedly helped. And provided the rand stays relatively strong, I think we can probably look forward to seeing the CPI staying relatively stable in that band, and hopefully not getting too far out, well, not getting outside the band, but staying pretty much within that band for the next few months.
We've got PPI out later on today. What are your expectations on that number?
Again, you know, we've seen PPI going into the positive space after being quite negative for quite some time. Those effects, I think, are now over, and we're seeing a bit of inflation at the factory gate. So I think in that kind of plus 3% or thereabouts, maybe a little bit more than that. You know, it's the link between PPI and CPI is perhaps not as close as it has been in previous years. So it'll be interesting to note to see what happens when this figure comes out.
It's quite interesting to see the consumer inflation numbers in the target band. PPI, well, it looks like it's going to be increasing. The SARB saying that they won't be decreasing interest rates, but consumers are still under pressure.
Yeah, the consumer economy is still quite fragile. It looks like it's turned. If you look at retail sales, although still in negative territory, looks like they have there's a turnaround taking place. Two things we've got to bear in mind, and we saw it with the release of the Reserve Bank bulletin the other day. Household debt to disposable income is still very, very high. It's not quite a record of 83%, but it's about 80%. It's close to that record high. People are not reducing their debt at the rate that you might think they would be, because they're not spending an awful lot of money either. So that's one thing that's going to put a cap, I think, on consumer spending growth. The other thing, of course, is the National Credit Act. So, you know, those two things I think will conspire to keep consumer spending under a bit more, keep it dampened relative to what we might otherwise expect. And having said that, I think that's why it's going to probably remain relatively fragile. The chances of another cut to try and promote consumer spending, not yet. The governor has been quite explicit, saying that don't expect any more cuts, basically. So I think that's right, but she's going to be monitoring the situation very, very closely. I think if the Reserve Bank perceives any further structural weakness in consumer spending over and above what I've just described, I think they may be persuaded to come in. But as things standing at present, no, I think we'll probably see these rates staying at these kind of levels for quite some time.
Moving on to Greece, there's a lot of figures being thrown about. Now it's that 120 billion euro loan proposed by the World Bank. But Chris, the 19th of May is looming, and Greece will need to get that aid before then.
Oh, yes. You know, it's funny. We were just saying earlier that if you look at the subprime crisis, that was boiling in the background for years, literally, before it blew. This Greek thing has been brewing for a long, long time. It's not like we didn't know about it. It's not like the Eurozone authorities didn't know about it. And we're now seeing Angela Merkel saying, well, you know, it's really about time we got moving on this one and got something, because otherwise we have the possibility of contagion coming through. And she's quite right, she's spot on. But at the same time, she's also saying, we're not going to give you guys a blank check. It's a bit like saying to an errant relative, yes, well, I'll loan you some money, but just make sure you don't ever do this again, and you get the message, you know. And I think it's like they're trying to really hammer this home. It's difficult because it looks like this 60 billion, $55 billion or whatever the Greeks are going to end up getting may not be enough, because their debt position is so utterly horrendous. We're looking at 150 and 120% of GDP. I don't think there's any other country in the Eurozone that's even close to that. Even Britain's around about 80%. But the problem now is that we're seeing it spreading. This is what the contagion is all about. To Portugal being downgraded. Spain's the really interesting one, because that's what 4 times, maybe 5 times the size of the Greek economy. It's a big developed market. And when you start getting that kind of downgrading, you know, then it's worrying. Spain's banking system is very robust. Its debt to GDP isn't anywhere near Greece's. I think the worry with Spain is its level of unemployment. It's 17, 18%, and for those people in below the age of 25, it's 40%. It's huge. So things like this are not going to help Spain. I think the authorities must really understand that you know, it's one thing to send out messages to people, get your house in order, but by doing by imposing massive austerity measures, is that necessarily going to be the way to get out of these problems? Not entirely sure.
Looking at the Greek situation at the moment, it clearly shows that you can't separate economics from politics at this stage.
Yes, indeed. And I think you put your finger on it. We must never forget that the European Union is a political and an economic union. And at the end of the day, they want to see this cohesive political union staying in place. They want to expand it. The last thing in the world they want is for some errant state to drop out and go away and do their own thing. So that isn't going to happen. There's going to be huge political pressure to make sure Greece toes the line, stays in place. But, and I've said it on a number of occasions, Greece, Portugal, Spain, it's not so long ago that all of these countries have had either fascist dictatorships or military juntas. So if you push people too far in terms of austerity measures, you may just get the wrong type of political move coming out of that. So they've got to be very, very careful. So politically and economically at a very, very sensitive stage.